Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top order on TradingView for many years, as well as being one of the only traders with a fully verified MyFXbook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about EURUSD. Now, as usual, to keep the video as educational as possible, first, I'll give you the technical aspect for this market, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which is testing and rejecting to the upside a quite strong historical monthly demand and support zone. All this area was acting as very strong previous demand and support, from which all these rejections to the upside fueled by strong institutional buying were created. And what we can notice is that we just had yet another test of that zone and rejection to the upside. And we can also notice that in all this period, there's only one moment in which the market broke below that zone, which was right here. And this push to the downside anyway ended up being just a fake breakout to the downside, because the market broke below, immediately broke back above, and continued respecting this area as demand and support. So here in the monthly, everything looks quite bullish. More bullish price action could be expected away from this area, as already happened in the past when the market was rejecting this exact same zone. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, what we can notice is, first of all, a perfect inversion from a weekly bearish market to a weekly bullish market. The market went from the creation of weekly lower lows and lower highs. We then had this double bottom created exactly at this zone, and now the market has inverted to the creation of weekly higher highs and higher lows. So more bullish price action could be expected away from this level for the continuation of this weekly uptrend. We can also notice, if we are to identify this structure, which the market is testing exactly the previous weekly resistance from which all these previous rejections to the downside were created, which now that the market has broken this level to the upside, is now turned support. Because what we know is that when we have a previous level of resistance, which the market is respecting as resistance, and then the market breaks above that zone, at that point, that previous resistance becomes support. And what you expect is the retest of the previous resistance turns support, and then you expect a rejection to the upside away from this area. So in a situation like this, what you expect is to see the market reject to the upside this previous resistance, which now is acting as support. Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. So on the weekly, everything is quite clear. Let's drop down on the daily time frame and see what we have. From a daily perspective, the situation is very clear as well. We can notice that in printing this push to the downside, the market has also created this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would expect is a rejection to the upside for the market to go and complete the M pattern at the neckline, so at the previous resistance turns support. Now, if you're asking yourself why the M pattern is such an effective pattern, we can see, for example, here we had an M pattern. After that, the market went and completed the pattern at the neckline. Again, we can see another one here. The market created a pattern and then went and completed the neckline. And if you're asking yourself, why is it that when we see an M pattern, most of the times the market goes and completes the pattern at the neckline? Well, the reason for that is it has to do with the psychology of the pattern itself. Because when we see an impulse in the market, a correction in the market continues going higher, at that point, most retail traders start buying. And usually they have their stop losses below the low, right here. So if the market then drops and takes out all those stop losses, that is a perfect stop loss hunting and liquidation event. And those kind of liquidation events are exactly what institutions need to load up their positions, because for in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. If there isn't enough liquidity in the market to match your opposite order, institutions can liquidate essentially retail traders that have these stop losses here and use that liquidity to actually fill their orders. That is why most of the times you will see the market go towards it where most people have their stop losses. I'm sure you have seen this over and over again happening. So in a situation like this, with the creation of this M pattern, there's a good probability of a potential reversal higher, completing the M pattern, the neckline, especially if we will see more institutional buying if the market will go lower. Speaking about institutional buying, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, what we have to keep in mind is that if we are looking at the data for the euro, we're actually already looking at euro USD because all currencies on the spot are already traded against the USD. And we also have to keep in mind that even though we don't have the very last few reports because the US government is currently in a shutdown, as you already know, so we're missing the very last few reports. In a situation like this, where we know that institutions take months to shift their positioning, we can try to understand what was the trend, what was going on if we're looking at the shifting of positioning of institutions over time. And what we can notice is that we were going from a negative net positioning right here around these levels with more shorts than longs, 195K shorts compared to only 185K longs. Now we're going to a situation where we have a positive net positioning, 114K net positions with 252K longs compared to only 138K shorts. So we went from having more shorts than longs to now having more longs than shorts. The complete opposite, which means that institutions have been increasing their longs and decreasing their shorts in the long run, so they're positioning themselves more aggressively to the bullish side of Euro USD, making it stronger. So keeping that in mind and moving back to the chart, what do we have? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description so you never miss new updates. Now back to the analysis. So in a situation like this, where we're having the creation of this M pattern, there is support around this area, as we have already seen, and the weekly time frame is already in an uptrend, and the monthly is rejecting a strong historical monthly demand and support zone. In a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection higher, completing this M pattern at the neckline, fueled by strong institutional buying. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.